Joining us right now is the Chief Investment Officer at Federated Investors, Stephen Auth. Steve, good to see you. Thanks so much for joining us.
Thanks for having me, Maria.
Your take on markets today?
Well, the markets today are going to be higher. I mean, we have a positive.
No, I meant today being like this moment in time, not necessarily today.
We've got a positive view if we look out 6 to 12 months. We think the market will get to 3,100 and eventually 3,500 by the end of 19. Our concern is near
on the S&P 500.
On the S&P 500. We've lightened up a little bit into earnings season. We're still overweight, but we were really out there in that pullback. My concern is earnings season, the guidance might not be as positive as people are looking for.
And that's what you said earlier, John.
Yeah, so we had 26% earnings growth in Q1. We're going to have something in the 20s again for Q2. Shouldn't the market be doing much better? And isn't it telling us right now that it is concerned about how this protectionist drift in Washington is going to affect the outlook for American companies?
Right. I'd say there's a few things that the market's concerned about and why it's not doing better that we think will get resolved positively over the next 6 to 12 months. One is the trade situation. That's creating a lot of uncertainty. The middle syllable of economy is confidence. So it's broadening out in terms of people's sense of where we're heading here without knowing what the lay of the land is. The other is what the Fed is going to do. I think most people I talk to think the Fed's just going to, on autopilot, hike away until we cause a recession. We're not of that view. We think they pull back at some point and slow it down.
So what if we don't get the trade deal? The expectation is something will get worked out with the Europeans, with the Chinese. What if everyone just keeps fighting?
Well, it just goes on forever?
That would be a problem.
A much longer time than people. I'm with John. It's fascinating to watch that people kind of assume. Other than that you think that that's what should happen, why do you think that's what is going to happen?
Well, look, I mean, President Trump he has a history of success in negotiating deals. I mean, you kind of assume at some point he either gets what he wants or he gets something that he can declare victory with.
On this issue, he's been one-sided. I mean, he's got 30, almost 40 years of a record of being essentially a protectionist. I mean, that's what he's on the record being.
Not only
and he said he's got America
first. That
resonates
with an important part of his political base. From his perspective, is he better off looking like a fighter who's going after China through re-election?
Yeah, that's where we get
doing a deal and saying to his base, we won, don't worry.
Right. So one reason that we're long-term bullish here is we think we have sort of two puts that protect us from something much worse than a 10% decline. One is the Fed. If you see something like that in the market, the Fed, calls timeout. And the second is the president. If the market drops 10%, he's going to back off somewhat on the trade thing.
He definitely watches markets closely.
Yeah, absolutely. So I don't think, your scenario it's just not going to play out.
It's nice to know it's not going down, but people out there want it to go up.
Well,
he will get a deal.
In my interview last week, he said, you don't know this, but every country is calling. They want to do a deal.
Yeah.
And I said, well, when do you expect your first deal? Because I think that's what markets want to see. They want to see a deal on the books in order to really have confidence that, in fact, he's going to win here.
Right, and he's got some people like.
So what's the deadline? When do markets start saying, okay, we still don't have a deal. Here we are in September.
Yeah, I think coming into the fall, I mean, the markets are hoping that by November, we know who's running the government, and we have something on the trade front. That removes a lot of the uncertainty. By then, you're a lot much closer to the end of the Fed hiking cycle. And I think a lot of that uncertainty bleeds out, and you're looking at what is an underlying strong fundamental situation, good economy, good earnings.
And he wants a story to tell going into the midterms.
And wasn't the whole point of tax reform, for example, to give that type of certainty that helps markets, helps confidence, helps investors? Tariffs and this trade war is injecting, to many people's minds, unnecessarily or needlessly new uncertainty when they're locking down other elements of the economy in good ways.
Right. I'd say the president's winning the battle on the unnecessarily comment. That was what we were first hearing. But he's gradually gotten, I think, a consensus within the country that the Chinese are, in fact, cheating. We're not really debating that anymore.
Yeah, but it's not just the Chinese.
Not the Europeans or Canadians.
I think
he's got U.S. public opinion with him now.
Good, that he's pushing back on China because they've been stealing IP for decades.
So I think that plays to his strength now.
But what he's talking about, the aluminum and steel tariffs, that's maybe.
And that might not be playing to the economy's interest, but it plays to his base's interest. All these manufacturing districts in the country that felt that they were left behind.
Except for the ones that are getting slammed by the tariffs, the steel-using industries, right?
Right, because everyone is back to the 1937. I mean, someone in the Journal put out a piece yesterday. You saw it. I won't mention who. And the quotes are from a book in 1933. Everyone's back on this idea. Their economics professor 101 told them tariffs are no good, where people actually put in tariffs thinking it's going to be a good thing. I think the president has won the PR campaign within the U.S. that the tariffs are a negotiating strategy, which he will resort to if he can't get something fair on the other side. But he's not in favor of tariffs because he thinks that's going to improve things longer term. He wants no tariffs,
in a better situation. And he said that when he was at the G7, he said, let's just do no tariffs. And then the other countries said, no, let's forget that.
Yeah, well, not that. Yeah.
But what about the president calling out individual companies? This week he called out pharmaceutical giant Pfizer. In a tweet yesterday, he says this: Pfizer and others should be ashamed that they have raised drug prices for no reason. They are merely taking advantage of the poor and others unable to defend themselves, while at the same time giving bargain basement prices to other countries in Europe and elsewhere. We will respond, says the president. Now, at that point, Pfizer stock takes a hit after the tweet. It rebounded by the end of the day and actually ended higher. But when I sat down with the president last week, I asked him if he should be calling out companies by name like that. He did it with Harley-Davidson over tariffs. Watch what he had to say on that. You called out Harley-Davidson, and you've been calling out Harley-Davidson.
I don't like that they're leaving.
But
they're not leaving.
Harley-Davidson is saying we're going to send some production overseas because we can't deal with the retaliatory tariffs out of Europe, and that's because of our tariffs.
Maria.
Should you be calling out specific companies? You're the president.
Yes, I should. Look, I devoted a lot of time to Harley-Davidson. I treated him good. I guarantee you, everybody that ever bought a Harley-Davidson voted for Trump.
Your thoughts, Steve?
Look, I think, you said it, Maria, right? Pfizer went down and went right back up.
Right.
I think people see this as politics largely.
Okay.
I think we're okay.
That's interesting. You know, there's an interesting change and shift that's gone on Wall Street. First, markets didn't know what to expect, and now they're giving him the benefit of the doubt on things.
I think they are.
He's winning that he's in negotiation mode.
He's in negotiation mode.
But you're not putting new money to work in the stock market right now.
Not yet.
You're still worried about earnings.
I'm worried that the negotiation mode is creating, the Chinese are counter-reacting in a way that people thought they would cave quickly. They're not. And I'm worried that broader uncertainty could affect guidance in the earnings season.
So what do you like right here? Where do you park some money right now? I mean, technology, how strong has tech been recently? That's been the leader. Is that a place to put new money, or is it overvalued?
Are at the margin, I'd rather buy the stuff that's already pulled back and is sitting down there. Industrials, energy, some of the tech names, the materials names.
The value stocks.
But it's the cyclical names, the value names, the financials. Those are the ones we like. But I need this uncertainty to lift to actually get them to work. But in the meantime, I don't think they've got a lot of downside from here.
What are you going to do in the fall if the uncertainty doesn't lift?
I'll play that move when I get there.
Doesn't sound like you're worried. By the way, also in my interview with the president, he said he's considering cutting the corporate tax rate again from 21% to 20%. Would that be significant for markets?
I think the market would be happy about that. I don't think he'll be able to get that done.
Steve, it's great to see you.
Thank you.
Thank you so much for joining us. Stephen Auth from Federated.